We turn now to the venture capital impact of the collapse of Silicon Valley Bank. Our next guest calls this situation, quote, the Cuban Missile Crisis for banking, with the bomb going off in venture. So is Silicon Valley Bank's downfall finally bursting this VC bubble? Joining us now is Restive Ventures managing partner Ryan Falvey, who was also a former employee a long time ago at SVB. Restive Ventures has fund accounts at SVB, and so do the companies that it's invested in. We're lucky to have you here from San Francisco, Ryan. Welcome.
Thanks for having me.
So how much has this turned your world on its head?
Well, I think it turned its world on its head dramatically last week, and I think we are quite concerned, obviously, for our portfolio companies, for the jobs at those portfolio companies, and then, to the broader ecosystem. I think we're relieved of how it's turned out, and thankful that I think the system in some ways worked and that depositors were protected here. I think the ramifications of not protecting the deposits of small businesses would have been extreme, but obviously we're now turning to the ramifications that will have long-term on the industry.
So what are those ramifications?
Well, I think we're going to have to go back to first principles of how we think about our jobs. I mean, our jobs are really twofold. It's to find founders and to help support those founders as they grow their businesses. I think it's, venture has a little bit of a clubby component to it, and Silicon Valley Bank, I think, was certainly part of that club, and so we have to look at how the elements of that club created some of these issues, and I think really opening it up and creating a more sustainable and stable way for us to fund these companies over time.
Yeah, the culture thing. I mean, as a depositor, that feels like something you could suss out.
Yeah.
But there's a debate about how much of your bank's risk profile you really look into as a depositor, right? I don't know. Do you think that as an industry, as in aggregate, depositors were lax or not?
No, I think it's really unfair to hold it to account for businesses that they should be tracking the financial health of their banks.
Right.
Especially banks that are seen as really the main source of financing for the ecosystem. I mean, make no mistake, the loss of Silicon Valley Bank will have a bad impact on the industry. I mean, they were a central player. They provided a lot of capital. They were one of the few banks that opened up deposit accounts for these really early stage companies, and they had a real specialty in serving them. The idea that a startup or a young founding team should look around and say, hey, I've got $1 million, I should have 4 different bank accounts, I think is crazy.
But what about the venture capital firms that started pulling money and telling their portfolio companies to pull money from this bank at the onset of this? I'm thinking about Peter Thiel and the Founders Fund. How did that happen exactly? And were you involved in that as well?
We did not advise our portfolio companies to pull money out, and we did not pull money out either. Frankly, we actually sent an email out late Thursday night saying, hey, try to stay calm. I think that this ecosystem, the system protects depositors. It's unlikely we'll lose money. And so we were obviously terrified on Friday morning when we woke up and it was frozen. But I don't want to comment on the behavior of other specific venture capitalists or venture capital funds. I think the vast majority of us in the ecosystem, we're focused primarily on protecting our companies. We have 60 different portfolio companies that have about $250 million of deposits across the American financial service industry. Very little of that was at a Big Four bank. So, the idea that, SVB could go down and wouldn't have impact somewhere else is, I think, obviously naive.
Right. It's not back to business as usual, is it? What happens to business risk tolerance at your companies regarding all lines of growth? Hiring people, R&D, CapEx. Does that change from this point on, absent the situation here?
I think this situation has exacerbated what was already a very challenging funding environment for startups. I think the risk profile has shifted against startups generally. And so for our portfolio companies, we'll certainly be advising them to keep it lean, to try to be really responsible stewards of the capital they do have.
But the wheels were already in motion.
The wheels were already in motion.
Yeah.
I mean, obviously we see the impact on tech stocks. I mean, the startups aren't any different.
Is it going to be hard to fundraise?
Probably, yeah.
A lot harder?
Great companies will always get funded. I think the real impact is going to be on the margins. Many of the companies we're investing in, we're the first check in. It's, $250,000 check. We're really trying to help them, get the business going. They might be pre-product. That's a really high risk area to sit. And I sincerely hope that the other funds we work with, don't pull back. I think there's still a lot of great opportunity.
Ryan, great to talk to you today. Thank you very much
me.
for coming by from Restive. We're going to continue to track the fallout from the collapse of Silicon Valley Bank. Much more coming up on Squawk on the Street, with the Dow up now almost 300 points. We're also watching shares of Qualtrics up 6.5%, accepting a $12.5 billion buyout deal from Silver Lake and others. Deals getting done. The Pfizer deal, Qualtrics with a mega deal as well. Shares are up sharply. We're back in a moment.